Okay, today we're going to talk about taxes. Now, a lot of times people don't understand that once you make over a certain amount of money, you have to pay taxes. That amount, I believe, is 15,000 a year. So once you make over 15,000, you have to start paying taxes. And taxes are just basically a percentage of your money you have to pay to the state and to the federal government to basically help with things that we all need, like infrastructure, like fixing potholes, um, money for schools, uh, money for wars, money for a lot of different things that our government does. They do it with the money that they collect from taxes. They collect in taxes from us. So we have to pay, and if we don't, then there are a lot of consequences that occur. Now there are different tax brackets. One, like, I don't know, say from 15 to $60,000. It might be, and don't quote me on this. It might be, I don't know, 15% or something like that. And then from 50 to 80, then it's maybe 17%. But there's a tier, whatever. And so some of you guys that get checks, work from your employer, or uh, government checks, they might even, some taxes are taken out in advance when you get your check. Like FICA, that's what I forgot what it stands for, but um, they take certain taxes out when you get paid. And that's why some people at the end of the year get income tax refunds. That just means that the government or your employer took out too much money, and so you get a refund back. And then if they didn't take out enough money, then um, you have to pay at the end of the year. So different. So when you do your taxes, there are different events or things that uh, enable you to pay less or more. So, like if you have write-offs, like so if say you make 50,000 a year, but you have uh, a child, and that child um, costs you 10,000 a year to take care of, or dependent, whatever they call it. Um, they would subtract that 10,000 from the 50, and only tax you on 40. Or like if you have a house where you can where you lose if you lose money on the house, you can subtract that from your income. Or so it's just a whole bunch of different, like, I won't say loopholes, but uh, tax laws that enable you to pay less money. And when you're single, like not married, no dependents, no property, any of that, you don't have any write-offs, that's when you pay the most in taxes. Now, the most important thing is to pay your taxes. If you don't, what they'll do is say you owe. Let's say IRS determines that you owe $1,500. It could be state or federal, whatever the case, and they're state and federal, so you got to do both. Um, if you don't pay it, they'll charge you penalty and interest. So that $1,500 you owe over years could turn into 150,000. And once they get over a certain amount, They will start garnishing your check. So they'll take it out your check. They'll take it out of your bank accounts if you have bank accounts. They'll make it so that you can't even have a bank account, or you can have a bank account, but anything you put in the banking account, the IRS will take it away from you or take it out of your bank account. Now, if you get into this situation and you didn't know that you had to pay taxes, you can you can make payment arrangements with IRS, and you can I think it's called an offering compromise. You can you might owe 150, 150,000, or whatever. They might settle for 2,000, and you don't have to pay anything else. Or the best thing to do is as soon as you owe the money, is to work out a payment plan then, because that'll be on 1,500, not on 150,000. So you can make a payment arrangement to pay $30 a month or whatever, and you can catch up. So it's always better to contact them, or to keep in contact with them, and if you do owe, to make payment arrangement with them, because you can, and a lot of times, once you if all you have is a job or one source of income, you might be able to do it yourself. But most people, pay an accountant, or they go to H&R Block. When things are pretty simple, you can use H&R Block. But as things get more complicated and you get more assets, or your financial situation just is more involved, you want an accountant. You want to find an independent accountant that will, um, that will do your taxes for you, and with an eye towards, you know, tax. What's the word? You want to minimize your tax liability usually. Now another word about taxes, which sometimes you minimize your tax liability by minimizing your tax income, and not your tax income, minimizing your income that you pay taxes on. Now, the problem with that is that's fine when it comes to paying taxes, but when it comes to buying things, like, if you want to get a loan for a car or a house or a business, when the bank asks for your taxes, then they'll see on your tax return that you don't make that much money. So, you know, that's the downfall, and then they won't give you the loan. So you have to kind of balance, showing a good income and, paying your taxes. Or the more, complicated it gets, um, you just hire an accountant to do these things for you. And another thing I will say, sometimes people do get scammed out of money by accountants. Um, by basically, they do your taxes for you, and they tell you that you owe a certain amount of money, and they tell you to send the money to them, and then they'll pay it for you. You send the money to them, they never pay the taxes, and they disappear. And you still owe the IRS, and you just got scammed out of your money. So basically, you always pay directly to the IRS. Whatever they say you owe, usually it's a link, like you can go to pay whatever. See, it's payment plan, installment agreement, whatever. You set up an account, whatever. You can look up how much you owe, and you can just make an appointment. I mean, not appointment. You can make a payment directly to the IRS. So that way you don't get scammed by giving anybody else any other money, or any money to pay on your behalf. Okay, so yeah, that's pretty much all you need to know about taxes. You need to pay them, and if things get complicated, you need an accountant. All right.